Will the market crash in 2026? Hello everyone, my name is Hunter, and today we will be going over the topic of the overall outlook of the market, if it is in a bubble, and what we should do if it were to crash. I have talked to quite a few people about this lately, and in the S&P 500 and the total stock market, it has been reaching all-time highs. Now, this could mean many things, but this is typically the sign of a pullback. I'm not trying to predict anything. I just want to make you aware of what you might be able to do in this time. Now, of course, when it comes to any time that people think the market is going to pull back, there's always a strong fear in the air, and you can just see it in the volume of the indexes and many different stocks. And things do start to pull back pretty drastically based on people's emotions and how they feel the market is going to turn out. And if they feel it is going to turn out bad, it can go down really quick. But what does this mean for you? Well, do you hold and continue to buy, or do you sell altogether? These are the two main strategies that people make a decision on whenever they think the market is going to crash. Let's go over the first example of holding. There are many factors that play into, am I going to hold my financial assets through a downturn and possibly a large crash? Well, I would say it really depends on your age and when you're going to need that money. For me, I'm very young and I don't foresee me using that money that I invest for the long term for another 25 to 35 years. But of course, this is coming from someone in their 20s who has a very large time horizon. I would not suggest doing this, however, if you are possibly in your 50s. And that's the whole point. When you're young, you have so much time to regain all of that back, plus some. And investing through a crash like that could really benefit you in the long term. But if you are in your 50s or almost in your 50s and above, you should probably think about maybe selling a little bit of your equities whenever the market is showing signs of a large downturn. Of course, this is not financial advice, and always consult with a financial advisor. But these are just a couple of examples of what you could possibly do depending on your age and what your goal is and how long you have before you need that money. Of course, in a perfect world, we would all love to ride the market from the bottom all the way up, and then when we see signs of a downturn, we sell and then we short the market all the way down. So then you're making money on the way up and the way down. But seldomly does that happen. We may be able to catch the downturn by shorting and making a little bit of extra money, but it's very hard to predict and know exactly when that right time is to sell off in your larger long-term funds and then start buying for the short term. This is why it depends so much on your age. So I would personally hold everything I have and continue to buy throughout the dip or the crash, no matter what it may be. So then in 10, 15, 20 years later, all of that money will be worth much more. But at the same time, I could hedge myself and short the market with any extra cash I may have. So if my long positions are going down in the short term, but I'm also shorting the market with a smaller position elsewhere, this would act as a hedge to offset the loss that I have taken in my longer positions. But if you're older, of course, sell what you feel is necessary and implement the same strategy however you wish. There are 100 different ways to do this, and it is all up to you and dependent on what your goals are. But the whole point is to watch the market carefully and be vigilant on what is going on around us and in the world. This will almost tell us exactly what to do if we pay close enough attention. At the end of the day, do what you feel is necessary, never invest more than you can afford to lose, and continue to grow throughout your financial journey. If you have any questions or things you would like to see in the future, put them in the comments below, and always subscribe for more traditional wealth tips.